Hello everyone. The market may be starting to treat power equipment as more than a secondary AI trade, and GE Vernova may be one of the clearest signs of that shift. What matters here is not just that GE Vernova raised guidance. What matters is why. This was not a normal industrial beat. It was a signal that AI demand may now be showing up in a part of the market that many investors still treat as too old, too slow, or too disconnected from the real AI story. GE Vernova raised its 2026 revenue and margin outlook, and the stock surged more than 13% after the update. That matters on its own. But the more important point is that the company tied that strength to demand linked to data centers, gas turbines, grid equipment, and electrification. In other words, the market is no longer asking only who builds the chips. It is increasingly asking who supplies the electricity that lets AI scale in the real world. That is the real change in interpretation. For a long time, AI upside was priced mainly through semiconductors, servers, and cloud names. Now the question is becoming more physical. If AI build-out keeps accelerating, then the bottleneck is not just compute. It is also power generation, grid connection, and equipment lead times. And if that is true, then a company like GE Vernova starts to look less like a traditional industrial name and more like a real AI infrastructure supplier. That is why this story matters. The market may be moving from AI needs more chips to AI needs more electricity, more turbines, and more grid equipment. And once that shift happens, the winner list changes. It gets broader, it gets more physical, and it starts to include companies that would not have been obvious AI winners just a year ago. That is also why GE Vernova's numbers matter beyond one quarter. Its power segment profit rose 57%. Its electrification-related profit more than doubled. Its backlog rose by $13 billion to $163 billion. And management said turbine-related backlog and reservations could reach at least 110 gigawatts by year-end. Those are not just strong numbers. They suggest the market is beginning to price in a longer cycle of AI-related power demand, not just a temporary order bump. And this may not be a one-company story. Siemens Energy also raised its outlook and hit a record high, with management pointing to strong demand tied to data centers and power infrastructure. So this is starting to look less like a GE-specific surprise and more like a sector-level repricing. Of course, there is still an important caveat. This does not mean every part of GE Vernova is suddenly strong. Its wind business remains weak, and tariff-related costs are still a risk. So the takeaway is not that GE Vernova is perfect. The takeaway is that the part of the business the market cares about most right now is the part exposed to power equipment and grid infrastructure, not wind. And that distinction matters, because this is how repricing begins, not when everything improves at once, but when the market decides that one business line is more important than the rest. That may be what is happening here. So the real interpretation is simple. GE Vernova may be one of the first clear cases where AI demand is no longer just helping digital infrastructure names. It is starting to reprice physical power infrastructure too, and the simplest way to say it is this. If AI spending is moving beyond chips, one of the next winners may be the companies that keep the grid alive.